Let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman singing for Larry Pesavento's hour. It's not Larry's show. It's just I'm taking the hour to do some of the charts. I certainly look at some of the stocks and some of the commodities, etc., that Larry would normally look at. And I just wanted to mention that I will be doing. Let me just put this up here. I wonder if we can see it. Can I get it? I think I can. There it is. Yeah. So on here we go. On Thursday, this coming Thursday, December the 15th at 8:30 o'clock, 8:30 in the morning, I will be doing a 5.5-hour trading webinar. I'll be focusing on the E-mini, but we will add anything that I'm looking at that will move. I might add the 3 times long or 3 times short to one of the ETFs. It'll be something that's a viable trading position, and we will be trading maybe 1 or 2, maybe even 3 positions, but I will see. We will definitely do the E-mini. Most importantly, let me just give you some of the information. It's a 5.5-hour live webinar, 8:30 to 2 p.m. We will be taking some breaks. Usually during the break, I'll answer questions, and we'll then come back officially, but the questions are an informal form. I'm there. You can ask the question. It isn't part of the, if you need to take a break, you can take a break. I'll quickly review what we were doing so you don't miss anything. I'll be looking at different techniques that I use. Some of these things are pretty standard to me. I use patterns. I use technical tools that I always put on the chart. I do a symmetry, bar symmetry, the number of bars on the left side to the number of bars on the right side. If you can find the midpoint, I call it the plumb line. Bars on the left and the cup formation that can go to, or the V-shaped formation that can go back. We've got a couple of examples here. In fact, there's an example that we're looking at right away. I'll show you. Let me just make sure that I can get this back here. I'll move it away. Look, within the context of the 1-minute E-mini chart, there was a low that was made right there at 11:42. If you choose to use the arch formation, you see the way that it made a low right here at, that'll be, there it is, at 12:22, so you've got a low at 39.98. At 11:42, it bounces up, arches over, and comes back and retests, but doesn't take out the left side low, and it's at 12:22. The low is 4,000, exactly 4000.00, and then it rallies again, and it makes another arch. But as it was doing that, I decided that the way that it was, see the measured move, I call this, in the chapter wave methodology, we call this a one-to-one expansion. But it isn't like a one-to-one where you're expecting the price to go from that point A to B and then from C to D. What I look for isn't just that. It's that I look for a diagonal trend line that is a perfect parallel match. So in the same number of bars, it's got to do that same degree of high to low. But even more importantly, look at the 200-period moving average. Look at this orange line right here. That's the 200-period moving average. I just put it on. You don't have to use it. When you need it, you'll see how important it is. Look how important. I'll squeeze this closed so you can see what I'm talking about. 200-period moving average, since it broke below it, at 9:45 this morning, look, it was a repellent. Then all of a sudden it turned around and went up. And then it became a propellant. Perfect, on the dot, I mean, to the point, to the fraction of the point. Comes back down and then pops up. And it pops up and then it makes, I'll talk about this for those of you who use Chapman wave methodology. This particular rally went to a peak E and pulled back. held that support level. This one went to peak A, peak B, peak C, peak D, peak E, pulled back. And then you got the sudden V-shaped upward move. I recognized immediately that this had the potential to do one of those things that I've got these terms that are, it's a figurative term, let's say, for most of my indicators. It explains exactly what it is within the context of that heading. And this one's the double camel hump. You know, there's some camels have two humps. Well, this is the one that I look at the stochastic, and the stochastic rallied up, made that E, pulls back sharply, hits the 200-period moving average, and then bounces. But you can see that the stochastic started to fail very quickly. And there's a technique I use. This is the technique I used when we were looking at the it was the S&P chart back in 2007. I think it was in the summer. It pulled back very sharply. And then it had the sudden spike in the weekly chart that went to one peak, pulled back, and I said, oh, I know this pattern. This is the one that fails on that second bounce. It's the double camel hump pattern. And lo and behold, we got that candle. That also produced in the monthly chart of the S&P. You remember Chapman Wave Roman candle, that specific candle that I always talk about, which was a signal to say that was the month after the top. That was in November. So yeah, we got this double camel hump, and it failed at this peak G, pulls back, and now you've got a 1-to-1, parallel 1-to-1, and it repeats it again. This goes peak A, peak B. I could have used a phantom C and then got a D, and it pulls back. But look, the MACD is much weaker. The stochastic can only rally above the trend line, the 80% line, momentarily, and comes back down again. It almost has this same pattern that it's been doing all the time, and that's usually a big negative. So I just copied this particular 1-to-1 pattern, repeated it here. This time, because the high was not nearly as high as the other, the pattern of the 1-to-1 pulls it under the 200-period exponential moving average. And then it had just a 4 or 5 minutes rally to the 200-period moving average. I drew this in. That was, look, 1 o'clock I did the show. So just before 1, I was drawing this in, and I said, uh-oh, this is I had done a measured move from this arch to this arch, and I said, uh-oh, here it comes. And now it's gone below. Now it's completed that move to the downside. You can see the stochastic is starting to flatten out. The on-balance volume is giving a little V-shaped turnaround, but it's not enough yet to say this is going to be a big move. But this is exactly where you can see a rally, at least that 200-period moving average. Look at the measured move from the 200-period moving average from. Now, I'm doing this, and I know that Larry never uses any of these techniques. That's not the point. The point is that I know when Larry's doing his charts, and if he sees my charts very often, we chuckle because the end result is sometimes the very same thing. We're just using different techniques, different ways of looking at it. So look at this particular one. This is what I call the 1-to-1 to the downside from the moving average, from this 200-period moving average. And look what happened. It's missed it, but that would have been a 1-to-1 of the entire move in the sine wave, where the 200-period moving average becomes the pendulum for rallying over, rallying under, rallying over, and then rallying underneath this 200-period moving average. And you got your 1-to-1 in the bar symmetry to the exact bar. Look at that. I'll be back in a moment. Basil Chapman sitting in for Larry's
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. I'm sitting in for Larry Pesavento's hour. Of course, it's not the Larry Pesavento show. I'm doing this as just a filler because I know that I love, if I'm around, I love to be looking at live charts. I know everybody does. So let me show you something here. This is the 10-minute chart. In the Chapman methodology, you can take I like to say you can take the naked chart and just look at the patterns. They unfold before your eyes. I always like to identify the lowest low bar and then count each successively higher peak. In the Chapman wave, you can go from A to G, alphabetized sequentially on the way up, uppercase when you're notating on the way up, lowercase on the way down. It's at D. Well, first of all, if after A, there's an upgrade of the technical picture and it goes from a buy signal to a buy mode, and we'll talk about that in a moment, it means that you should go to at least a D. Many people in the den were looking for a D in the 10-minute chart earlier on, and I'll explain how that unfolded in a moment. But the objective is to get you there. Then I also look at just basically 3 core patterns. One is straight line up, straight line down. The other is the cup. The other is the arch, and a mix of 1 and 3 and 1 and 2. This is the arch. If the arch fails at the first or second peak, it can go quite a lot lower than that left side low. On the right side is the inverse, the green, the Y, backwards Y. If it takes out the left side high, it can go much higher. And I also look at a narrow rectangle and a wide rectangle. So what have we got? We've got a peak D, it screams up to a peak F. It walks a particular moving average that I like to use. I'll talk about that in a moment. But then eventually goes to peak D right here and then fails and plummets down. That was the news early this morning. But then it bounces and it starts to make slightly higher highs and higher lows. And if you alphabetize it, look, from the bar that makes the low, that's a low, but you don't know it's the low because you have to wait for the right side to make a V-shaped pattern to say, now you can start the wave count. So you can only start the wave count on the right side. And here we go, peak A, peak B, peak C, and it pushes above the 200. See the way the 200-period moving average is acting like a sine wave? You can go up, you can go down, but you keep coming back to that 200-period moving. It's just an amazing thing. It's a look-back period of 200 bars of whatever time frame you're in. And it has significant because as the price, as the look-back period gets closer and closer to what is actually happening, so at a certain point, what was a very important level and then wasn't becomes a very important level again. So here it is. So what we've done is you got to that fourth highest peak. It pushed away from the 200 period moving average, and now it's arching over. And this arching over says, within this context, be careful, because if it starts to push down away from the 200 period moving average, you've got to look to the left side, troughs. They call them troughs on the downside as key support levels, and each one of those will become a support level. Not only that, at this particular point, you could start to draw the Chapman wave inside wedge target repellent line and support line. Sorry, target, I'm doing two things at once. Target support line. So right here, you can start to go across like this, and all the bars, you can say, all right, that's starting to meet some kind of support. Okay, let's get out of that. I wanted to show you this, some of the techniques, and we'll go to the bear chart. And the bear chart says right here, look, I love to use trend lines. And when I used to hand chart decades ago with a ruler and pencil on graph paper, engineering paper, I found that when I drew these lines, that sometimes I'd be measuring the price and putting in all my notations and things. And then like weeks later, I'd hit this trend line and I say, where did that come from? And if you look here, I'm putting in a trend line. It's just a simple trend line, and it's saying that trend line has importance. What does it do? It gives you, and I usually make these green. You don't have to change all these colors. I'm just doing this to demonstrate. You can do this right here. Now, this is a historic chart because it's a look-back period. It's a historic. It's only an hour, a couple of hours ago. But I call it historic because you can't go wrong. You can do whatever you want. Yeah, the chart's not going to change, right? So this is what I like to do. Look at this. Here's a Chapman wave inside track repellent zone. It just popped up once and then came down. And now what I like to do is to say, let's make the same thing at the bottom right there. And we'll go to the, look at that. So here's the support level. I haven't changed anything. All I'm doing is joining what is already there. But look at this. Look how clear it is. Look at this. I'm going to continue the same track right here. Right here. Look at this. Look at this. I haven't changed it. Well, I'm changing it only because it's a little hard to. I could have extended it. Look, it goes there. And it goes, and I'm going to show you how it relates to all the charts that we're looking at this particular point. Look at that. There's your Chapman wave inside track repellent zone. Is that not easy? I mean, it's just nothing to do. Everybody has trend lines that you do on every package, every platform has, this is a package. Oh, where did that disappear to? Oh, there it is. Oh, come on. Make it easy for me. Come on. There. So, look at this. So this goes on right here. I want it parallel because the whole, it's one of those days I can tell. Let's go back. So that, in fact, you know what I'll do? I'll just extend it. I can do that. And then I won't have to worry about, I'll just say, extend to the right. Okay, extend to the right. There we go. Look, and this is, we're just doing this. There's no big deal about it. And look, we'll see where it takes us. And look where it took us to. Is that not an inside track propellant zone? Propellant zone, propellant zone. Whoops! It slips underneath, and now it becomes a repellent zone. Look at the trend line right here that you could have drawn. This is just trend lines. This is what we're going to be doing on Thursday. These are the easiest techniques. I know there's a lot of words. One of the things that I found in my technique is that because I have so many, I have a plethora of what I consider at least for my techniques, have been original works that I found by trial and error and experiment and a great deal of money trying to find whether they work or not. Look at that. You've got your repellent zone. Boom, boom, boom. Don't have to use lettering or anything like that. Not only that, on a visual basis, what is this chart saying right here? It's saying, look, there's a large arch formation. A large arch formation. Make that the midpoint of the arch. And look at this. You go from there. Then you go to there. And if you want the bigger arch, you can go from there to this right here is the midpoint. Then you can add the right side, the number of bars on the right to the number of bars on the left. And what do you get? To the bar. I'll be back in a moment. Basil Chapman, Larry Pesavento's show. I'm sitting in.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So all I'm doing here is I've got the gold chart, the 1 minute gold. I'm using 1 minute because it does exactly the same thing as daily, weekly, monthly. All I'm doing is picking the peaks and the troughs. And I'll show you something in a minute. A, B, C, D, and then it makes a cup formation. That's the double hump. And it goes, so here we are. So look, in the Chapman methodology, the idea is to get you from a beginning starter that gets upgraded to a buy mode that goes to at least a D. But it can have consecutive moves after that. Look, here's your first peak D in the 1 minute chart from 10:20 this morning. Then it goes up, goes to a D, and then quickly goes to an E and pulls back. So here's your next starting point. It goes peak A, peak B, peak C, peak D, pulls back, and then quickly goes to an E and then pulls back. And that's like an isolated, I call it the right arm extension. because everything looked like it was supposed to pull back, but it suddenly creeped nominally higher and then failed. So now look at this. And now, let's just say it's over here, and I'm looking at it and I'm saying, if it takes out that low right there, where would it go? Well, I would start off with a measured move from here, and I have to do it in principle at the top of the turning point with a little doji candle right there. So I go, this is green, I'll change it to green in a moment, and then I go red. And if it hits that first one, I can start looking at the second one. So green, here it is. This is key support now at the gold continuous contract 1813.3 level. And it missed it. So what happens is when it does that, I look, and if there's a cup formation, I go to the trough of that cup and I just extend this and I say, okay, it is coming down. I want to see if it's able to hit a measured move. The measured move goes from there to there, and I'm moving it over. Well, I don't know yet whether it's going to go lower, but it missed the first turning point. And then all I do is I'd measure, move like that, click, click. Oops, that should be there. And we'll see what happens. At least it's giving me a guide. It's saying, look, this is a support level. So it comes down, it misses it, but it goes by it a little later on. So that's one thing. Now, the next thing I would do is I'd say, okay, from that point that I measured, I'm going to get what I call Chapman wave inside wedge target support line. So I take it from the left side, a particular candle on the left side, I draw it, and I draw it right through. Now, what's interesting, I wonder if I've still got it here. I had this on the chart, I think, from yesterday. I'm just going to continue this all the way. Let's just see where it goes. So I extend to the right. Okay, so now it's making lower troughs. Trough A, trough B, trough C, D. Rallies to A and B and fails. The dreaded H, that H pattern, it did it once, it's done it twice. And it keeps coming down. And this is my trend line. So as it's going down, I'm saying on the left side, where would I have a measured move to? I always go right to the outside of the line. I drag it across like this. I look at it like that and I say, well, we're already way past there. So now you have to find a particular candle. So I have a methodology that says move to the right until you find a particular candle. And there it is, that candle right there. Right there. If I can let go of the mouse, there. And then you can do your measured move to the right side. So you go click, measured move to the right. So everyone has, you don't have to have the rectangle or anything like that. If you've got a straight line, perfect for Thursday. You just need to be able to have the one on the right, you can make a dashed line. So in this case, I always put green because that was green. Now let's see what's happened. It hit the line exactly and it's still going down. So you can see what I'm looking at here is I've drawn in a support line and I did it purely on the technicals that were there and some of the technical indicators that I've developed. So with that in mind, that's one of the things that I could do. But within this context, look, I can draw a channel and say, hey, wait a minute, the price is in this channel. And it's also an expanding channel. So there's a line that you've got to take into consideration. And where does that line go? It goes right to, all I'm doing is joining the lines. I haven't made them up. These are the lines here, right? So look at that. Isn't that amazing? I always think, and this is how I got into the technical analysis, is with hand charting with pencil and ruler. And then, of course, I did other things. We had a 0% change in the Dow the other day. I used to do a ton of work on 0% changes, but that was when prices were at 700, 1200, 3500, 7500. It was easy to have less than a percentage change in the Dow on the close. When you get to what we were the other day, look at this. Let me go to this technique here. So this is what I show subscribers every day. There's your peak D. The objective in the Chapman wave is to get you to a D and then see if it goes a little higher and how you name it after that. So the Dow went to D at 34,589, starting to pull back. I use moving averages. This 9 has been fantastic since it crossed. We are still long, in fact. Since it crossed over back on the 19th of October, we along from the 14th of October, the green moving average has been up, and now it's getting close to turning down. I've got to consider that there is the potential here for an arch rollover, and I'd drawn this in the other day to say this is going to be very interesting because there's a chance we could rally up to the moving averages, and then we might start a rollover. Is that where we make changes for subscribers to my opening call? Is that where we start to look at the downside possibilities? Maybe we'll see this weekend. We'll see how we close. But this is the same thing with that's just got moving averages. This has got the MACD, the moving average convergence, divergence, the slow stochastic, and the on-balance volume. It's also got automatic notations of Chapman wave resistance and support levels. You can see right there, there's a resistance level. There's a support level. This is the 120-minute chart, kind of rolling over after peak B. The technicals are not very strong, so we're going to monitor that. 33,999 is an automatic reversal. I just want to check to see if today we've got, is this the one? Yeah. If we've got any signs here, it is options expiration day. No, there are no signs in the Chapman wave trend gauge to say whether or not we should get some kind of a bounce in the next 2 days or an immediate decline in the Dow. So that's out of the question. So some of those are just simple techniques. You don't have to use the Chapman wave notations. You're just looking at what works. Look at this. I've been discussing it for a while. Look at this VIX index. Look at that inside track propellant zone. It's been going on since July, where the VIX was at about 15. And look, every time it's making slightly higher highs in the volatility index weekly chart. This past week, it went under it. This week, it's been above it. So for the move that we've seen in the Dow of about 500 points or so to the downside, the S&P is a little bit more in percentage terms. The volatility index for the first time on a Friday, going into a Friday, is green at the bottom. It's often been green at the top, and then it just fails after that. Look at the Chapman wave inside track repellent line. Every time the VIX has got up to that level, it's turned down. So those are just simple techniques that I'm going to be demonstrating as we go through charts. We'll have positions that we will put on, and we'll be trading them. And in the meantime, the Dow's down 60, the S&P is unchanged. Very interesting action that we're looking at. And I'll explain why I'm saying that there's a divergence or a bifurcation here, and that we might see a rotational correction continue. I'll be back in a moment. Basil Chapman sitting in for Larry's Hour.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Look at the 200-period moving average on natural gas. This is the continuous contract. Look at how it bounced off the 200-period moving average at about 5 a.m. Eastern time. Bounces up, does an arch formation, holds the left side low, doesn't go under it, hits the 200-period moving average, and then goes up. What is the objective in the Chapman wave? Is to get you to the fourth highest peak, peak D, and then other things can happen. So what does it do? It goes to peak A, peak B, peak C, peak D. I'm a little embarrassed. I'm talking about this. And the UNG, which my subscribers and I, we had a really good gain in it earlier on a few weeks ago. And then watched it just come sailing down. We went to that peak D. What's the objective, peak D? And then it plummeted. And right here, I said, I think this is where it's making its low. And I just didn't say, let's get in. Okay, we had 3 days in which to get in. I never did anything. But we've been following it minutely, minute by minute, minutely, that is. In any case, and look at this. Peak D pulls back. I didn't draw this in, but look at that left side, right side price time match. Yeah, it's like a pyramid. I often call these, it's a little bit like looking at the Eiffel Tower, straight up, straight down. Look at that. That's to the upside, number of bars to the upside from the low that was made. Nothing made up. Everything is right here. There's no interpretation. This goes straight up and straight down and misses it by 3 bars, 3 minutes. Isn't that incredible? Look, goes up. There's your plumb line. I call it the plumb line. Sometimes it isn't there. You have to do it. I say it's not by eye. It's by specific candles that we use. We move this line to the right or to the left to say that's the measured move that we can do from a particular level. And I demonstrate that level. So here it is. Comes plummeting down. And I would have put in the, I wasn't actually trading it. I was notating it at the same time. I always do that. It's like practicing. It's like tennis that I play. You always want to be practicing these shots. So I always practice this, and it helps you to be in the game in a better way. And look at this. Here's the measure. Here's the inside track. This is the wedge support target line, and then it starts going up. Now, whenever there's a sudden plunge like this, we'll see it in a moment. I'll show it to you. A straight down plunge like this, I always draw the wide rectangle formation. And I say, if this particular price that you're following starts to make higher highs and higher lows, it could go to a peak D just under, right on, just above the previous high, and then could pull back. If it takes out the midpoint of your rectangle formation, be careful because it can go all the way down to the bottom. Well, this kept going to the 200-period moving average over and under and over and under. Then it goes over. It takes it as support, and you get another peak, ABC, 1, ABC. How many Ds have we got? 1, 2, and 3 goes back. I had a measured move here. It got to it. It just missed it in an earlier time frame, but that extension went to that peak B and a brand new ABCD. But this one continued higher to E and F. Now, I wanted to show you something else. Look at the way this natural gas, it could be anything. At this point, we're looking at natural gas. Look how right here, how can I do this? Right at this point, right here. I should do it on the upside. There you are. Right there. It crosses, there's a positive crossover. Look, positive crossover. It goes from, well, I should have said, I was writing and talking at the same time. I meant to put it in over there. That's the positive crossover right there. I thought I was there. Look, that positive crossover, regardless of all these PDs, if you got into the trade right there, I talk about a 2-click session, and that's what I'm going to talk about on Thursday as well. There are days where it's possible to have it in a 1-minute chart. You can have, or preferably a 10-minute chart, you can have a 2-click session. You click early in the morning, and you don't have to unclick until much later in the session. Well, in this particular case, I didn't do it. I'm just saying I'm using this as a demonstration. I should have done it, but I don't trade natural gas. I do the UNG. That's different. But in this case, it was at 7 in the morning. It crosses over, and it's at 3.925. It kept you in the trade all the way to there. That pink line right there. This is a 1-minute chart, and it kept you in the trade until 10 o'clock. That's almost 3 hours in a 1-minute chart. Isn't that amazing? And then it goes to this technique that I use, Chapman Wave Instant Restart. Says you can continue going, if within 3 bars you go over D, E, F, and G, but G you get G/C because an alternate count is very often that it goes to the G, and if it only pulls back slightly, it makes a cup formation or even like a rectangle formation, it'll retest that high, and that's where you want to do a measurement that says, like Tom O'Brien looks at volume in different places. I look at the on-balance volume, I look at the MACD, the stochastic, and I say, at this particular point, are the technicals better or worse? And in this particular case, they were worse. It says, be careful, it could pull back a little bit. Well, it pulls back, it goes pink. A moment right there, it stays as pink, it's pink, it's pink, goes green, and now you've got, I haven't done the notation here, but I just wanted to show you that. So let's just do the notation here. We've got a low bar here, parallel highs, pulls back. So this is your first peak A. And this is easy. I mean, anybody can count the alphabet, right? A, next peak is B, next peak is C. Your objective is get to the D, but all the technicals are holding good. Look, the MACD hasn't turned down, everything, and it pops up to what? An E and a quick F. E, whoops, uppercase on the way up, Mr. Chapman. E, and look, a quick F, that's that double, that camel hump. You remember the double camel hump? And lo and behold, that's where it starts to turn down. Then I don't have to even look at this. I grab this and I say, oh, it's coming down. If it turns down and fails in that dreaded H pattern, we can get a pullback that takes you to, where does it take you to? A worst case basis says you go all the way back like this in bar symmetry. The number of bars on the upside can match the number of bars on the downside. And we don't know. We just put it in. So here we go, and we'll see what happens. And I could also put an inside Chapman Wave inside wedge target, make that green, target support line right here. And I would have to go from that level there. And I go to the right. I don't know where it's going to go to, but now I can see where it goes to. And it goes to where? Left side, right side, price, time match, bam. Look at that. Number of bars, it did it in a shorter period of time, it bounced, and then it took it out. And what was important before and who cared about it afterwards was, let me just show you, the 200-period moving average that it finally broke above. It was goodbye. You didn't even need it until when? Until right here. And it hit it. Isn't that incredible? I mean, I love technical analysis. I think that's why all of us here at TFNN, we just love these with the charts, with the technical work. And there's your peak F top. And there's your arch formation. Amazing. I'll be back in a moment. Basil Chapman sitting in for Larry Pesavento. Dow's down 60.
The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. Just as we come back, let me just show you. You remember the rectangle that I drew earlier on in this particular 1-minute chart? Where was it? I believe it was the natural gas. I'm going to show. I've done so many charts today because I'm trying to find charts to use as demonstrations as well as doing it live. It was the E-mini chart. Let me just go to the ESH23. Yeah, remember you remember the rectangle that I drew? Oh, I didn't discuss that. I did it in my show. A narrow rectangle can last a lot longer than your patience. The price keeps going to the outside, just at the border of the upper one. You think breakout. No, that's where it reverses and comes down. And then if you can identify the rectangle, comes down and keeps holding. I've changed this a little bit. It goes to the bottom and then it rallies, and it does that over and over until it breaks to the upside. So look what happened. The E-mini held the 200-period moving average. So there's your rectangle formation. Well, lo and behold, if you're looking at, now I can go to this. If you're looking at natural gas, here's the rectangle. So I've drawn the rectangle, and the rule of thumb is that in the rectangle formation, if it goes to the bottom and then starts to make higher highs and higher lows, it can go back to, and I use the big candle, not the top, just the huge candle. That just gives you your borders so clearly. You can go just under, right on, or just above the previous high, And then if it takes out in the narrow rectangle, takes out the midpoint of the rectangle, be careful, because it's probably going to test and probably take out the left side. And if you even do a measured move and you say, oh, it's starting to pull back, going to a specific candle, look at this. On the right side, we go right here. Let's see, I need it. Yeah, I'm going to that candle there. Oops, no, I'm not. I'm going to this candle because there has to be a specific candle. If it's not obvious, then you have to go to a specific candle. Click the thing and see if it does the measured move to the right side. Here we go, move it to the right, and it's a little extra. There it is. It took out the left side low, and now it's bouncing. Where's it going? Towards the upper range, but this is arching over. It went lower, so this should be a lower high for natural gas in the 1 minute chart. Then it should pull back. Have a wonderful weekend.